Welcome again. Thanks all for joining. My name is Alex Davidoff. I am Director of Account Management and Business Development here at AlphaPoint. With me today, we have Graham Moore from Polymesh and Anton Star. We just talked about how to pronounce that? Can you please correct me? Because it's all
Starverov. It's okay.
Starverov. It's great pronunciation from AlphaPoint Labs. Graham, I'll let you introduce yourself first, and we'll go to Anton.
Yeah, I appreciate it. Hey, everybody, Graham Moore, the co-founder and head of tokenization at the Polymesh Association. And so the Polymesh Association, our mandate is to grow the ecosystem of the Polymesh blockchain. So that's what we're here to talk about today is AlphaPoint and Polymesh. Announce some news where we're going to be working together. So very excited to dive into it.
Yeah,
I'm
Anton.
Anton. Yeah, I'm Anton Starverov. How to pronounce it? Director of AlphaPoint Labs. It's a special division in AlphaPoint where we research new technologies and also develop solutions beyond AlphaPoint products. And this is one of those we're going to talk today about. It's integration with Polymesh. It's basically adding support for Polymesh blockchain in our two existing products. One is tokenization platform or digitization platform, and another one is our marketplace. We'll highlight details later. So let's start.
Great. So for everybody attending here, please feel free to ask your questions in the chat. We're going to have a Q&A session towards the end. We're planning to leave about 10 minutes or so, give or take, depending on the volume of the questions. So please, we want to be here to answer your questions and interact with the audience as much as possible. So I'm going to start with you, Graham, and can you go through Polymesh, exactly what it is your platform does in the world of asset tokenization and where it's relevant to the ecosystem?
Yeah, for sure. So I think it helps talking a bit about the origin story of Polymesh just to sort of set the stage. And so initially, our team back in 2017 was founded, and we were a company called Polymath, and we were building tools on Ethereum for security tokens, or now people call them real world assets, RWAs, tokenized securities, whatever you want to call them. And so we were really one of the first teams building that kind of tech for compliance and securities functionality on Ethereum. And as we were building on Ethereum, we just decided, this isn't a very good blockchain. It's not a very good technological infrastructure for securities. Instead of trying to shoehorn in this protocol on top of Ethereum, why don't we just build a better blockchain? And so that was the idea of Polymesh. So Polymesh is a layer one blockchain built specifically for financial securities. So all of the issues that we found that we had with Ethereum, we think we've solved them, or at least getting closer to solving them for a lot of those issues by building Polymesh, a layer one blockchain. And so the main issues that we found with Ethereum were governance, identity, confidentiality, compliance, and settlement. And so we built Polymesh just for this one case. Polymesh is not built for the next dog token. It's not built for the next Web3 game. It's built specifically for how can we get the world's financial securities on a blockchain.
And those are those like not necessarily swaps, but other kind of like blockchain-based contracts for settlement more than anything?
Yeah, so really any kind of financial securities. So we don't really focus on one specific area. We have seen a lot of excitement around real estate, around debt, and around carbon credits. And then we're also seeing a lot of interest in funds as well. So people have probably seen the BlackRock Biddle Fund. They've seen Benji from Franklin Templeton. And so that's where we've seen the main interest. But Polymesh as a blockchain, as a platform, our focus is on financial securities, but it doesn't really matter which kinds of financial securities.
Okay, because we've seen a lot of people building on Ethereum and ERC20 in the past, and I know there's a lot of limitations to the product. Can you kind of elaborate on what Polymesh and your own chain has done to kind of get around those and kind of expand on where ERC20, it's one of the primary use cases for a lot of the tokens out there, but they're not necessarily they're financial in nature, that they're a store of value, but what else? And maybe can you elaborate on that, and why your chain is specifically better than Ethereum to build on?
Yes. So we were actually one of the first teams who extended ERC20 for financial securities. And so anybody listening to this, if I have an ERC20 token, there's no concept of transfer restrictions, 24-hour volume restrictions, whitelisting, et cetera. And so we were really one of the first teams to extend that logic into a full ERC that we called the ERC 1400. And so as we were building that, it wasn't necessarily about the ERC20 standard itself. It was more just about Ethereum in general. And so I talked about governance, identity, compliance, confidentiality, and settlement. I'll run through those really quickly. So for governance on Ethereum, one thing we noticed that actually a lot of banks noticed, and I think there was a thing put out by Ernst & Young around maybe 2019 or 2020 that talked about this. If you have a tokenized asset on Ethereum, and let's say it's a $100 million bond, and then there's a contentious fork. So now ETH has split into ETH1 and ETH2. Where is the $100 million bond? Well, the token's actually on both forks. And so which one has the real claim to the underlying assets? Huge question mark. Do you wait after the fork to decide to wait for Vitalik to tell you which is the real fork? Do you see where the ETH1 token is worth more than the ETH2 token, and that's how you decide? Do you pause trading while you're figuring this out? It's a huge question mark. And so on Polymesh, there's always one canonical version of the chain. There is always one version of Polymesh. Contentious forks would literally become a Polymesh, A, B, C, D that are not associated with the Polymesh Association, so not a canonical version of the chain. That's one. Identity is another one. So on Ethereum and Solana, Bitcoin, take your pick, on these general purpose public blockchains, anyone can be any account. And so, again, talking to banks, talking to regulated players in the capital market space, they did not like that everyone was pseudonymous. And so one thing that we kept hearing from banks was, if I make a trade of, again, let's say a $100 million bond, I pay $5 in gas fees, those $5 can go to North Korea. North Korea could be the entity that creates that block and gets those transaction fees. So something that banks definitely do not want to do is be seen funding North Korea or any other actor on an OFAC sanction list, for example. So on Polymesh, by contrast, every user has to pass a KYC process. And then every single node operator has some kind of financial license, whether that's a broker-dealer license, an ATS, et cetera, some kind of financial license. So that banks and financial market intermediaries and people in the capital market space, they can at least feel comfortable, okay, I know when I'm paying transaction fees, they're going to one of these. I think now we have about 25 regulated licensed entities. For compliance, that's where I would say one of the ERC20 things comes in, where for compliance on Ethereum with an ERC20 token or an extended ERC 1400 token, or now there's a bunch of other standards as well, all of the compliance is smart contract based. And so whenever you trade financial security on Ethereum or another blockchain that's smart contract based, it's a smart contract talking to a smart contract, talking to a smart contract, and that's how settlement takes place. And it gets very computationally expensive to do that. And so we actually found we were hitting the limits of the Ethereum gas architecture in 6 months into development. So imagine 5 years from now when you want to automate an insane amount of things and it's all smart contract based. It's a very computationally expensive transaction every time you do that, which means it's a very expensive transaction in terms of just money that you're paying for fees. And so on Polymesh, it's actually an API-based chain. And so the concepts of a token, the concepts of trading, of settlement, of compliance, those are all actually baked into the base layer of the chain. So you can think of it as Polymesh, the blockchain, actually understands tokens and understands compliance. Whereas on Ethereum, it's a general purpose open infrastructure. The blockchain has no idea what the token is. That's why you have to deploy a smart contract to say this is the token. And this is the trading, and this is how compliance works. So it's all tons of smart contracts, very computationally expensive. Confidentiality is a big, yeah.
One quick question for you. Has the migration, a lot of what you're talking about is related to the old proof of work chain on Ethereum. Has the switch over to proof of stake changed any? I mean, I'm assuming it's still the same on the computationally expensive side. Like you still have to talk to multiple chains, but has it changed anything on the governance for you at all?
I mean, not really. There could still be a contentious fork where some group of the ETH core developers want to implement some new upgrade and some don't, and then the chain can still split. And so there will be stake power on one of the chains, there will be stake power on one of the other chains. And so there's still this concept of potentially having all of your assets, $100 million, $100 billion. Imagine if we put all the world's financial securities and we have hundreds of trillions of dollars And they're just, there's a big question mark on which chain are they actually on. So it is still a thing even with the proof of stake Ethereum today.
I still have some ETC laying around somewhere.
Nice.
So
yeah.
not nice. I should have sold it for anything else. But that's not possible on Polymesh to fork your chain.
No, so I mean, someone could theoretically change the code base, right? And they could launch their own version of Polymesh, but it's very clear that is another version of Polymesh. So there's on-chain governance on Polymesh, and so that's one of the ways that there is always one canonical version of the chain. And so what some of the, let's call them the Ethereum maximalists or the decentralization maximalists, they wouldn't like that because that's maybe more centralizing, but banks don't care about that. Custodians don't care about that. No one's too concerned in the world of capital markets about how decentralized the infrastructure is. What they're worried about is, does it work? Does it solve my problems? Can it do things cost efficiently? And so that's what we care about. And then, so just to keep, going through these. So confidentiality is a very important thing for us. So we have a cryptographer we're working with, who's like won a bunch of awards and stuff, where we're working on how can we obfuscate important information in transaction while still allowing people to transact on a public blockchain. And then finally, settlement is a big one for us, where on Ethereum and on Bitcoin, on Solana, take a pick, on general purpose blockchains that weren't thinking about capital markets, the way settlement works is I find out your wallet address and I send you anything I want at any time. Banks hate that. Custodians hate that. If I find out, for example, when BlackRock announced their BUIDL fund on Ethereum, everyone started sending them a bunch of random tokens. People started putting tokens through Tornado Cash and then sending those tokens to BlackRock. And so, that's something that capital markets players do not like whatsoever. And it's just not how settlement works in traditional capital markets, where on Polymesh, which is how traditional capital markets work, is sender affirms settlement instructions, receiver affirms settlement instructions, and only then can a trade take place. So both parties, or 3 parties or 5 parties, or however many parties are in a transaction, they all have to affirm the settlement instructions, instead of Ethereum, where only the sender has to affirm settlement instructions. And so that's kind of, the big reasons why we decided to build Ethereum. But yeah, happy to field any other questions on that.
So it's really, really helpful. Thank you for sharing all that information. I kind of wanted to turn it over to Anton here for a second, because now we know what your chain can do, and Anton can talk a little bit more about we understand why we chose that, but now Anton, maybe you can explain how they would leverage AP Labs to kind of put something like this on an actual platform.
Yeah, definitely. And I think it's not only about AlphaPoint Labs or customization part, but it's in general. AlphaPoint product portfolio can be very beneficial in conjunction with a Polymesh blockchain. This is why we selected Polymesh as the next major blockchain to integrate with in our products portfolio. Worth mentioning, we started long ago, actually, tokenization services, providing tokenization services and infrastructure. Like in 2016, 2017, we started exploring this area. And since then, we have been using heavily Ethereum, and we have been relying on Ethereum infrastructure for our clients and their tokens. And yeah, as Graham mentioned, it's really a lot of drawbacks recently, especially increasing gas fees on Ethereum. And in general, this general purpose and focus of the Ethereum led us to Polymesh. There are more advantages. I think we can discuss later, maybe more about Polymesh side of things and those details. But yeah, let's speak about AlphaPoint products and how actually existing users of Polymesh, or those who are considering to use Polymesh, can benefit from our products through this integration.
So I'm sorry, go ahead.
Yeah, if you have a question, let's.
No, I know that a lot of this is on compliance, security, and operational efficiency. Where have you seen? I know, because we do get a lot of demand on the tokenization side. We have a platform called AlphaPoint Asset Digitization, APAD. Where do you see does the client kind of steer what chain they want to be on, or do they want us to kind of help them decide how exactly to list everything on a chain?
It's definitely a lot of uncertainty now on the market, and we receive a lot of questions. Clients are frustrated which blockchain to choose because it's a very costly decision. Once you choose the blockchain, once you start creating tokens, it's very, very hard to step back. Even if you launch some token on Ethereum and then later you decide to change rules of your token or compliance rules, it's very hard to upgrade those contracts deployed. So decision making here is a key. And yeah, let me speak for the client perspective a little bit. So yeah, gas fees I mentioned, it's a real concern, and I really like Polymesh approach. It's fintech focused. So we're trying to solve, and we actually solve this problem. It's a different design of the chain, allowing to mitigate fees. And it's built for operational, for transactional systems. It's not like Ethereum, which is general purpose and it's allowing to deploy smart contracts. But when it comes to transactions and operations, it's not really efficient, and Polymesh is solving this problem. That's why we think, in conjunction with our exchange platform and our wallet solution, where transactions are a key, actually, it should work really well on Polymesh blockchain. And in general, on Polymesh, you don't need to write smart contracts even. Everything is available through API. And we are consuming those APIs, and we can deploy new tokens, and we can maintain lifecycle of the token completely via API. Set compliance rules. It's very secure and it's very stable, especially for regulated environments where security and scalability is the key. And not to mention, yeah, I need to share like these insights. Not to mention that regulators, when regulators come into place, they really like Polymesh approach because it's allowing them to demand those compliance rules. KYC is enforced in every transaction. It's 2 legs, and you have to approve not only from the sender side but from the receiver side. Which is crucial for some regulators. And on top of that, you can deploy everything on premise. You can Graham maybe speak through Polymesh private more, and but it's a real solution. Like if client is looking for blockchain, even if we want to start on public blockchain, but they have they have a need to go on premise at some point. It's a real challenge. It's not many blockchains available who can do this. And Polymesh can, and that's a huge advantage.
Yeah, I'll touch on that if you're cool with that, Alex.
No, of course.
And Anton mentioned Polymesh Private, and so Polymesh Private was born out of just a lack of real tokenization use cases, and we still haven't seen that $1 trillion of assets coming on chain. 2017 in my mind was going to be the year of tokenization. It was going to be $100 billion on chain, and then it was next year, and then it was next year, and we're still not really there. We have seen some encouraging things, but a lot of financial institutions are still only comfortable with private blockchains. And so Polymesh is a public blockchain, but it's permissioned, right? We talked about the KYC and the node operators needing a financial license. And some banks, some custodians, some financial institutions just still aren't quite there yet. And so they still want a private blockchain that they can deploy in their own infrastructure on premise. And so that's what Anton was talking about, where the idea that we had was those financial institutions today are using some kind of solution. And then when they want to migrate to a public blockchain, because they finally do realize that is the future, whether it's a year out, 2 years, 3 years out, they do want to migrate to a public blockchain eventually. They will have to rewrite their entire code base if they're using a different blockchain, moving from a private blockchain to a public blockchain. But what we said is, well, why don't we just allow them to point their endpoint for all of their internal tech stack to Polymesh private if they want to deploy that inside their own infrastructure. And then when they're ready to go to a public blockchain, they just move to a different endpoint called Polymesh. And so the idea is it's very seamless and very easy for someone to move between Polymesh private and Polymesh public based on what their needs are. and based on maybe their jurisdictional requirements. So not locking in people into a public approach or a private approach, but giving them the ability to switch between with very little discomfort and necessary tech rebuild.
Got it. And then there've obviously been a lot of problems with private blockchains in that you can't really validate what's on chain. How do you I know that a lot of people are really worried about XMR and Zcash because of that. So how do you get around that? How do you make sure that the ecosystem has the trust that everything that you're putting on chain that's private is really there?
Yeah, so for something like Monero and Zcash, so those are actually public blockchains, but with privacy built in.
Yep.
So what I'm talking about for Polymesh Private is it's a private piece of software that lives inside of a bank's infrastructure or inside of a custodian's infrastructure. And so at that point, it's more similar to the tools they're using today, where yes, you have to trust someone, but you were trusting that bank anyways, you were trusting that custodian anyways, you were trusting that exchange anyways. And so from that point of view, we haven't really seen many of those concerns on the, are we trusting the bank to do the right thing? Because, they're a gigantic institution, they're very heavily regulated. And one of the other cool things about blockchains is that regulators can actually get, they can get an account on chain. They can potentially actually see real-time data into these markets where they actually didn't have access before. So that's also one thing where we think tokenization is very exciting from a regulator point of view, where in private markets today, regulators really only have access to stuff when something goes wrong. Someone sues someone, says, hey, I was supposed to have 10,000 shares, but now I only have 5,000 shares. What happens? I'm suing you. Regulator comes in to clean up the mess. But with blockchains, these private markets can actually be on chain in real time. And so a regulator could actually see real-time access into these markets, and they can actually see, okay, something bad is happening here. Okay, something fishy is happening here. And so that's one thing that I think is pretty funny that's going to happen soon, where this infrastructure inversion or this regulator inversion is coming, where regulators don't like blockchain because they say, it's bad, people can do whatever they want on blockchains, but they're actually going to realize we can have better access into policing markets. And so we actually like blockchains a lot more than pieces of paper flying around fax machines in lawyers' offices or transfer agents' offices.
You can see what anybody does anywhere. That's one of the beauties of Bitcoin and Ethereum and any blockchain at all being public. I wanted to turn over to real world use cases. This is an open-ended question for both of you. Who do you see? Who are your actual live customers now, and who do you see being potentially your customer base expanding to in the future?
Anton, you want to take that first?
Yeah.
No, if you can start, I will add them.
I can start if you guys want me to, because right now AlphaPoint has a couple of clients. AlphaPoint has a couple of clients, ERX in Thailand, and GreenX, formerly CryptoSX, is in APAC region as well. Both there are some others that I can't really mention publicly at this moment, but both of these companies have tokenized assets, put them on chain, and they continue to do that to this day. ERX is doing this for real estate assets. They've tokenized real estate in Thailand, and GreenX is doing a variety of different STOs and projects that they put on chain, both gold and actually real world assets as well. I don't know if either of you, Anton, I know you can speak more on the prospect side. Graham, I know we have some visibility into what Polymesh is doing, but it would be great if you could speak about whatever projects you're working on right now.
Yeah, so we have a ton of tokens in the pipeline, essentially. There's actually a company that we haven't officially announced, but people who are on-chain sleuths can always go see things before they get announced. There's a company that created 400 assets on Polymesh a couple of weeks ago. And so they're building a cross-chain bridge between Polymesh and other blockchains, because they believe, like also we believe, Polymesh is a great blockchain for settlement. And so Bitcoin, Ethereum, stablecoins might want to live on Polymesh rather than living on these other blockchains. And then they can start to interact with these securities that will be trading soon on Polymesh as well, and being the other leg of the transaction. And so that's one company. We haven't announced the name yet, but coming very soon. And on-chain sleuths, they can go dig into the tokens. And they can find the company name. One company that we're very excited about that we just recently put out some news with is RE Tokens. Real Estate Tokens is their name. And so they actually just tokenized the first church in the whole entire world. And so that's on the Polymesh blockchain now. And so the really cool idea there is there's a church. It's in Fort Collins, Colorado. And actually the people who go there and they go worship and they have their community events and whatnot, they actually don't own the real estate that they're doing that in. And so they said, this is crazy. Why don't we own this building? Why don't we own this land that we're using? And so they're actually going to now crowdfund some money. I believe it's $2.5 million, and they're going to own the real estate that they actually operate in. And that will be based on fractionalized tokens that live on the Polymesh blockchain. So that's probably the coolest thing that people will be excited about. There's other things we're working on, like real estate titles in Florida with a company called On-Chain Listings. There's carbon credits from a company, ESGCX. There's really, every single corner of the world, every single type of asset are things that we're dealing with, but those are some of the most exciting that are pretty recent.
And Anton, how do you see AlphaPoint expanding our relationship with Polymesh and using their kind of infrastructure to list our own RWAs with our own perspective and actual clients now?
Yeah, I should say we receive increasing amount of requests in the tokenization area in general, and some of them are quite exotic. For example, we are talking about mining contracts, and in general, instruments which have dividends for investors. It's really attractive, and those assets on the blockchain and even payments on the blockchain. It's a very trending question. Some clients are asking, prospects yet, asking about commodity tokens even, and we're considering to use blockchain for renewable energy investments. And then, for example, you are building a solar plant and you want to attract investments from all over the world, and then to be able to pay back those investors as long as solar plant works and produces energy. And all of that can be kind of digitized, and you can see in real time how solar plant is performing and how exactly your investment is turning around and giving you return of your investments. Carbon credits, it's also a very popular question, and tokenized bonds, of course. Like those institutional jurisdictions, we're looking for ways to expand the range of investors, to allow more investors to be a part of this big game. And blockchain is the key here to give transparency and trust to those investors, but also for those who are issuing those bonds, because those are very large projects.
Go ahead.
Yeah, I should also mention here, it's not only new opportunities. This is also important. A very important question is privacy and being able to control what you're minting, what you're issuing, especially for regulators. And this is why Polymesh private is so important. This is one significant component, and AlphaPoint can give another two. One is tokenization platform, and another one is digital assets marketplace. And all three components can be deployed on premises. That's very important, because now it's plenty of solutions on the market offering you like a self-service where you can create a token, for example, and then transfer it. But actually you don't manage this solution. It's not yours. You only can like use it and then get your token back. But as a regulator, it's completely unacceptable, because you don't control infrastructure. You don't have like full control of private keys even. So Polymesh private, in conjunction with our tokenization and marketplace platforms, all together deployed on premises. It's a real unique setup, and we're looking forward for this turnkey solution deployed and to see more cases implemented and new opportunities created on the capital market.
Yeah, and to kind of touch on what Graham said, we've had clients who've been tokenizing real world assets I've been at the company almost 5 years, since I've been here and before. And one of the major limitations that all of our clients who've done this have said is that the ERC20 contract is very expensive, and that's why kind of one of the major purposes of this webinar right now, is to say like, hey, we're doing this, but we're not just doing this on ERC20 anymore. It really benefits us to have a partner like Polymesh that can do this in such a better way and offer a much better product to our clients in the end as well. And that kind of feeds into Q&A here. I don't know if Graham or Anton, if there's anything else that you wanted to touch on before we move over to the QA section here.
I think I'll just really briefly touch on. I think what Anton mentioned about exotic is absolutely what we've seen as well, where that's where blockchain really shines, I think, and tokenization really shines. Initially, 2017, I got into this, and I'm thinking, okay, great. The NASDAQ next year is going to be built on blockchain, and Apple stock is going to be traded on blockchain. But nobody really ended up caring about that much, because I can go to a brokerage account, I can click a button, I can buy Apple stock. It works pretty well. But how do you buy carbon credits today? How do you trade carbon credits in a liquid market? How do you trade debt from a country, that maybe their debt you weren't really thinking about buying? You have to call someone on the phone at a broker somewhere, and you have to actually schedule a trade. And that's how it gets executed. How do you buy receivables that are inside of a company? How do you buy IP royalty contracts for music? And so all of these kinds of exotic things that aren't just necessarily straight equity, that could be public. That's where blockchain and tokenization really shine, because they can create these global liquidity pools with proper jurisdictional requirements and KYC and all of that good stuff, where they previously didn't exist before. And so creating the first market for these things is really exciting. And that's something that we're really looking forward to working with AlphaPoint on.
Right. And also, if AlphaPoint now, we can create a secondary market or like a venue for the secondary market. So once those tokens are issued and minted, they can be traded safely on our platform for trading. And that's also exciting to see how those secondary markets will flow once created, those tokens.
Yeah, the secondary market is quite an interesting place. And AlphaPoint's platform can be the secondary market, or the secondary market can exist somewhere else. So,
right.
If you guys are okay with it, I'm going to go through some of these questions that have been asked live. And for everybody in attendance, please feel free to submit your questions, and we will answer them in the order that they are submitted. So we'll start right now with a question here. Does Polymesh run as a private chain, meaning can a bank run its own chain limited to its users only? And Graham, that is definitely a question for you.
Yeah. And just to kind of reiterate, so there's Polymesh, which is a public permission chain. It's a public blockchain, and people can go use it as long as they pass the identity check. They can go use it. So I would say Polymesh, no, but Polymesh Private, which is a totally separate product, yes. And so that's what I was talking about, where Polymesh Private can absolutely be deployed inside of a bank's own infrastructure, limited to only its users. The bank could then, delegate node operating functionality to another bank or another custodian or transfer agent or whoever they want. But really, it's their product that they control inside their own infrastructure, and they can decide how they want to do it. So there can be multiple instances of Polymesh Private at Bank A, Bank B, custodian C, running Polymesh Private however they see fit. And there's a number of different parameters based on how they want to run it. Are there transaction fees? Are there not? Are transaction times, are block times 6 seconds, or are they 60 seconds? They can decide all these kinds of parameters because it's actually their technology that they're deploying, built by us. And so, yeah, to answer your question quickly, can a bank run its own chain limited to its users only? Yes.
Excellent. Here's another question for AlphaPoint. In which use cases, such as real estate or cars, does AlphaPoint aim to build on top of Polymesh? Additionally, does your platform support multiple blockchains, including Polymesh, or will it be exclusively based on Polymesh? So AlphaPoint, quick answer. I'm going to answer the second part of that question first. AlphaPoint has been in business for over 11 years now. We are a blockchain agnostic platform, meaning you can build anything and integrate anything on top of AlphaPoint. You don't even need to use blockchain assets. We integrate with fiat currencies as well as other assets such as equities, which could be listed on AlphaPoint's technology. So AlphaPoint is agnostic. You can do anything on AlphaPoint in terms of actually listing, trading, and facilitating the deposit withdrawal function. Now, in which use cases, such as real estate or cars, does AlphaPoint aim to build on top of Polymesh? This is, I guess, both for me and Anton, but it would be the areas where we have our existing asset digitization platforms, and we've seen the inefficiency of the other chains that have been built on, and what Polymesh offers vis-a-vis what the other chains do not, as Graham has kind of really detailed the inefficiencies of ERC20 in this call. And Anton, I think that this is also kind of for you to see what use cases our prospects and our current clients are looking to build on here.
Yeah, I think the answer is actually a Polymesh private, and also if it's in a financial institution or not. So definitely, if it's a financial institution, if Polymesh private, like private blockchain, is in need, we definitely will advise building on Polymesh. And even if it's not private, if it's public blockchain, but if it's financial institution, we will certainly advise to build on Polymesh. If it's something else, if it's general purpose, or if it requires a custom smart contract to be implemented, in this case, we will use Ethereum, for example, as probably most supported platform in our products. And yeah, I can answer the last part of this question here. Yes, our tokenization platform will be supporting both blockchains at the same time. So Ethereum and Polymesh will both work at the same installation. So if you're a client and if you're using our tokenization platform on your premises, you will be able to actually consume both at the same time. So if you have financial instruments to be tokenized, you can use Polymesh. But at the same time, if you have some other very specific or exotic demand, you can always switch to Ethereum and launch few specific tokens on Ethereum to benefit from smart contracts there.
Great. Thank you for answering that. This is going to be another question for you, Anton. Is there any plans for AlphaPoint to become a Polymesh node validator?
Yeah, that's a good one. It was already discussion about that, and we will certainly consider that. But I think it's more different to our clients and prospects how they will use it. Will they be up to run Polymesh nodes themselves? It's certainly a plan, but it's hard to say when we will be at the point to run those ourselves.
Got it. Thank you. I think this is a question for all of us. Does a lack of regulation, e.g. stablecoins, impede on the development of real-world asset markets, primary or secondary? Graham, I think you're probably going to be best to answer that first here.
I would say partially. And so, we've talked to banks in the United States who say they will not touch USDC or USDT, just because there's not a very clear guideline stating this is how you can deal with these assets, this is how you have to treat them as capital on your balance sheet, et cetera, et cetera. And so I do think that is impeding markets a bit. But the nice thing about security tokens is you don't necessarily have to trade them against a stablecoin, right? And so AlphaPoint has Fiat rails, right? And so someone could have a security token inside the AlphaPoint's exchange, or someone else operating an AlphaPoint exchange, and they could be trading security tokens back and forth, and then eventually cash out with dollars at the end of the day or at the end of the month. And so I think, yes, it's impeding the decentralized security token market, where people could be trading some securities on a DEX and things like that. But I think most of the players that we see in the markets are still wanting to use dollars. They're still not quite comfortable with stablecoins. And so, these markets will develop with or without stablecoins. And we think that most of the large financial institutions will use dollars still, or euros or whatever you have.
And what we've seen also on the regulatory side is our clients are always aimed to be licensed and regulated in their jurisdictions. And if they can be first to the punch and they can get in and get listed and get live be regulated, then as the regulations change, they effectively become grandfathered in, and they just make sure that they comply with it. Whereas then that becomes a barrier to entry for new entrants because they have to comply with a lot of other things, and regulators may or may not be quite as keen to approve a new entity. So a lot of it becomes making sure you're compliant and launched early, so to speak. That's one of the things that AlphaPoint's technology allows you. We can get you up and launched in months as opposed to years that we've seen a lot of these platforms take to build. Okay, moving on to the next question. I'm not certain I want to answer this. I want to ask this, but I'm going to ask it anyway. ZK proof ETA. Does anybody know what they're talking?
I'm guessing that that's a question about Polymesh.
Yeah.
When are we going to have some type of confidentiality solution? So we are very close. And how we're thinking about that is we are going to launch that on Polymesh private first. Having a privacy solution where, let's say, it's being used by a massive bank and they're deploying hundreds of billions of dollars on it, and they're trusting that ZK proof. You really want to make sure it's been battle tested. And so deploying that on Polymesh private first, where it's already in a closed ecosystem, that's how we're thinking about that is give it some legs, give it some room to run, and have it running for, it's called 6 months to a year, and then maybe moving that over to Polymesh, the public version. And so that's how we're thinking about it. But yeah, let's call it, months away at this point.
Got it. Thank you. I was worried about that one for a second. Okay, next question. How do you convert fiat yield on, say, real estate to yield on the token? Which intermediary deals, trust performance issues? I guess this is for me and for Anton. Right now, AlphaPoint has a module called the yield platform, which automatically distributes yield as the operator determines on the yield platform. In terms of the trust performance issues, it's very, very solid along with the rest of the Apex platform, SOC certified platform. So there's not really a trust problem there. I think that if you're talking about on the back end in terms of the intermediaries, that's something that would be more client specific, and we really can't get into the nature of that on this call. But it's not generally a problem, say, if fiat yield becomes real estate yield, to kind of just operate it as, say, an airdrop on the token. Or maybe airdrop is not the word, a distribution would be the word there. And Anton, I don't know if you can elaborate on that one a bit, on how we would actually plan on converting fiat yield into yield on the token.
Well, it's definitely we're going to use yield module for that, to manage distributions of those yields. But also, maybe I don't understand fully this question. It's saying converting fiat yield back to the token. So what that means, maybe we need to clarify first how it will be converted back to the token. Or is it a question that we're going to distribute yields on the blockchain itself or off-chain? Both options are available, if that was a question.
Yeah, I guess if it's fiat yield, maybe it could be put tokenized. And USDC, USDT, I know we don't like mentioning those necessarily, but that's another option potentially. Okay, next question. Which regulatory bodies is Polymesh working with in the UK? Does Polymesh collaborate with FCA in the UK? I don't know if you're
we don't necessarily have an office there or anything. We do have a presence there, I guess. Our CTO is based in London. I'm actually speaking at the Digital Assets Week conference in London in 2 weeks, or is that 3 weeks away? And so we do like the UK. We've had conversations with the FCA. We've had conversations with Bank of England. Nothing official to report at this point. Are we licensed or anything like that? No. The way we prefer to work is for other folks to have their licenses, whether that's a broker dealer or a transfer agent, or the custodian or the central securities depository. They're the licensed entity. We're just the blockchain. The question I always ask when a question like that happens is, what licenses does Ethereum have? Is Ethereum collaborating with the FCA? Like, no, like the same way, Polymesh isn't necessarily collaborating with the FCA. We are, however, thinking about doing something interesting in the UK that hopefully we'll be able to talk about pretty soon, but just not quite yet.
Got it. Thank you very much. Next question here. I think this is for all of us. Will real estate tokens, secondary ATS, attract non-Polymesh based tokens?
Yes.
Quick answer.
Yeah. I'll jump in. Sorry. Yeah. So retokens, today they are only integrated with Polymesh. I could see a future where that's not the case, and like Anton mentioned with AlphaPoint's blockchain agnostic. Today retokens is only integrated with Polymesh.
Got it. Thank you. Next follow-up question here. Thanks, guys. Very useful. What are your estimated timescales for integrating Polymesh into the platform? I guess that's an Anton question. And can you give a rough idea of how much AlphaPoint clients pay for a token issuance? These are questions for you, Anton.
Thanks. I knew. Yeah, so we are currently finishing the development piece of this integration, so we'll need to do a testing round, of course. But on a high level, we're expecting to release it this year, in next few months. So if you're looking for this integration and together with our products, it can be launched at the end of the year, maybe early next year, realistically, to production. It can be available earlier for development preview and internal testing. About pricing, I think first answer we should give, we don't charge actually for issuance, because we are a technology provider. We provide you a platform for issuance where you can issue as many tokens as you wish. That's the whole idea of our on-premise solution. We only charge for technology. We charge like a license, monthly fee, and installation fee depending on your complexity. You can request a sales team for exact quote. It's usually on the levels of our exchange product. It can be also a discount if you buy two as a bundle.
Great. Thank you, Anton. Next question here. Does Polymesh work with RIAs, or does it have to be broker-dealer? If a broker-dealer, does the type matter? For example, if the broker-dealer only uses private placements, can they use Polymesh?
Yeah, Polymesh, we work with everybody. So it's an open blockchain platform. Yes, there's the KYC aspect where users have to onboard through an identity check. But we absolutely work with broker dealers. So there's a few that we work with right now, and they are doing private placements. I actually think the private placement market is one place where Polymesh and just tokenization in general really shines, where you take this completely opaque, paper-based process into something that's now digital and visible on chain. And so I actually think that that's one thing that's pretty exciting in the world of Polymesh and just tokenization.
Excellent. Thank you, Graham. Another question here. What is the institutional I like this one. What is the institutional appetite for tokenized assets? There has not been a major uptick apart from a few use cases here and there. We're all going to answer this one, I imagine. But on my side, there's always been a pretty massive institutional appetite. Everybody wants to be the first one to do it in their specific use cases. And we've had a couple of clients actually be the first ones in their markets. We continue to get a lot of our inbound leads are related to tokenized assets specifically. And we have a lot of clients that we can't necessarily discuss beyond the ones that we have that are doing this actively right now. And I'll turn it over to you two to kind of answer the rest of that one as well.
Yeah, I'll jump in. Yeah, we think the appetite is huge. It's the regulatory clarity and working through compliance that we still think people are quite slow on. But that's almost the same thing for anything securities wise. The amount of inbound that we've seen and the amount of people that we've now started working with over the past 6 months is more than our company worked with over the past 5 years. So it has changed a lot recently, and I think a lot of that has to do with the tokenized treasury funds that are now on chain that are consuming billions and billions of dollars now. Where before, I think the thought in a lot of people's minds was, oh, well, like this is still kind of a niche market and it's still really only the pioneers and the big banks and the big financial institutions aren't here yet, but now they're finally here. And so that's almost given a green light to everyone to say, okay, they got this through their compliance department with their 5,000 person compliance department. We can obviously get this through ours. And so I think things have changed in a big way, but based on how securities laws work and based on how offerings work, it takes a while for the people to go from, all right, let's do this to actually being live. And so I think we'll see a huge amount of uptick in use cases over the next 6 months to 1 year as those things work through the compliance departments, as those things work through their securities offering documents, et cetera. And so, yeah, I'm very excited to see all the assets coming on chain in the next 6 months.
Yeah, same here. Same here. We see so many requests and new demands last year, last month especially. We see a lot of RFPs on the government level even. So those RFPs will be closed this year eventually. And so next year, a lot of projects should be developed and launched. And yeah, it's very exciting to see. It's definitely an uptick, and it's definitely on institutional and governmental level.
Great. Thank you. We're going to try to get through a couple more of these questions before we wrap it up here. Maybe technical question here. Is AlphaPoint responsible for custodying users, keys, and funds on Polymesh or whatever chain, or users have the option to control them independently while using the platform self-custody? Easy answer. AlphaPoint is not responsible for custody of any assets. This is all on the user side and whatever custodian the user decides to use. I don't need to kind of give that off to either of you. Okay. One more question. We're going to get through 2 more questions and then we're going to wrap up. What are the key friction points to tokenization in the USA? Are there specific regulations that drive the preference for private chain tokenization? What, in your view, will shift to public chain infrastructure? Graham, I think that one's going to be more for you, and hopefully we can get a quick one.
Yeah, I think there's some really interesting stuff right now around the Basel rules, where this is something I talked about actually in a presentation in London a few months ago, where it's possible that banks actually can't do tokenization on public permissionless blockchains with any meaningful portion of their capital base because they have to apply a risk-weighted asset, essentially penalty, and hold more assets to counteract the fact that they're using public permissionless blockchains. And so that's actually part of the reason why smart contracts we don't think are very good, because banks are potentially relying on very important critical infrastructure from random people in a GitHub repo somewhere who deployed a smart contract. And so these rules around capital requirements, I think, are one big thing that's holding back public blockchains specifically. But more specifically, public permissionless blockchains that are smart contract heavy and not public permissioned blockchains like Polymesh that are API driven. And so those Basel rules and those capital-based requirement rules, I think, are one big thing holding things back. And that's why banks, they'll do their proof of concept, but they can't put a meaningful portion of their capital into tokenized assets, because then they might have some penalty that says, oh, that's a very risky thing based on Basel III rules. You actually have to hold more capital to counteract that. And so blockchain brings down the cost of things, but if you have these weird capital requirements that completely offset the beneficial cost savings, then it doesn't really make sense. And so I think we still have to see where those rules shake out. But in the meantime, we're really encouraging people, and we think the way forward is to use private blockchains and to use public permissioned blockchains like Polymesh.
Got it. Okay. Just want to wrap up here. I think we got all the questions here. Thank you both, Graham and Anton, for conducting this webinar with me today. Please feel free to direct any of your questions to myself, first last name at alphapoint.com, or Anton, first last name at alphapoint.com, regarding the platforms. And Graham, Anton, I don't know if you want to say a few words to conclude.
Yeah, I'll let people know. Yeah, send me an email if you want to talk. It's Graham, Graeme. I think you can see my name here on the Zoom. Graham at polymesh.network. You can also find me on LinkedIn, Graham Moore. I'm on X. I tweet or post a lot. It's at Mooregrams, Mooregrams. But yeah, go check out our website as well, polymesh.network. There's a ton of great info there. If you like the info here on this webinar, you'll find some more cool info there as well. We publish lots of blogs, lots of content, trying to educate people on this new exciting space.
Yeah, I want to thank you everybody for participating today and also asking very good questions, very thoughtful ones. It was a pleasure to speak and answer some of those. If you have more questions or if you want to request more details or talk about pricing and how exactly our products work, feel free to contact us through any of those emails or through our website and sales channels. Thanks everybody.
Thank you all for joining. It's great to conduct this webinar, and you have a great rest of your day or evening, wherever you are in the world. Take care.